So we've been warned then to expect the longest recession since the financial crisis. You'll remember the Bank of England hiked the base interest rate to 1.75% yesterday. That the biggest single percentage points rise in 27 years. Decision makers, of course, are hoping it'll keep inflation under control, but it does mean borrowing money will become more expensive, much more expensive too for people on variable mortgage rates. Well, joining me now is Andrew Teacher, independent property expert and founder at Blackstock Consulting. Andrew, good morning.
Morning, Lisa.
And if we just focus then on the property sector and people who've got mortgages, I mean, clearly this latest rise will cause them, or some of them, plenty of problems.
Absolutely. It's very, very worrying and very, very sadly, I think there are going to be a number of people, particularly many of those people that have never experienced the sorts of rates we're going to now see, will face particular pressures over the next 18 to 24 months. A number of people basically who have not been alive at the point in the major government the last time that interest rates went up by such a huge hurdle. And the reality is, for those people that are on fixed rates, many of which will expire over the next year or 2 years, they are going to find a pretty feisty hike in costs of their mortgages each month.
Absolutely. So let's dig into it then. I mean, if somebody, say, Andrew, has got a fixed rate term coming to an end soon, should they, for example, be getting in touch with their lenders urgently, you know, to lock in a new rate? What's the process if they want to do that?
I mean, it's going to depend on their personal circumstance. So people that are basically staying put for the long term are going to be advised to go and speak to their lenders pretty imminently. I think as well, people should use advisors where they can. Using mortgage brokers will give you a lot of fantastic advice in the market, and they can help navigate what's often quite a perilous journey dealing with mortgage lenders. I mean, like anything in the property market, it's pretty backwards. It's straight out of the 1970s. Some lenders, like Coventry, for example, that I'm with, still do everything on paper. So it's often much easier to have someone on your side that can help you navigate through that. I mean, ultimately, some people with longer fixed rate terms may be able to wait out the crisis. The rates might have come back down again somewhat before those deals expire. But for anybody that's on trackers or variable rates that is planning to stay put for the long term, all of those sorts of folk would be advised to get in touch and look at fixing now so that they can plan. And I think that's the problem that we're going to have. We've got this double whammy of rates and the cost of living going up, and it means that whilst one thing might have been digestible, such as fuel and energy costs, having that alongside mortgage costs could be the nail in the coffin for some households.
As a property expert then, Andrew, looking in on this Tory leadership race just now, have you heard much perhaps to encourage you and others in the sector on another aspect of this, new house building?
Not really. I mean, I was talking about this yesterday with some people in regard Liz Truss and her flip-flopping. 1 minute she was an advocate for building on the green belt. Next minute, once she's realised that this is going to lose her votes with the Tory members, she's against building on the green belt. We've got Rishi Sunak, who again pretty much against development. He's come out against building onshore wind, for example, one of the things that would help have solved the energy crisis we now face. And unfortunately, both leadership candidates are doing exactly what all the previous folk have done. They play to the gallery. They play to the gallery for short-term political gain. And until we take, I've said this to you on LBC many times over the years when you have me on this program, it's about taking property development and the planning system totally out of politics, whether we're building nuclear power stations, runways at airports, homes, anything like that. It cannot be linked to someone's political career, because there's never going to be any short-term gain for these sorts of activities. And I think, again, we've got this sort of treble whammy of not building enough homes for people on lower incomes, because often those things are very unpopular. You go into a community and you say, hey, can we build some social housing? And people look at you like you've just threatened to unleash the plague sometimes. And this, I'm not even over dramatizing this. And until we get away from this and think about the genuine supply of affordable rented housing, rather than introducing policy measures that are going to undermine that, which the current government's going to do, and which is not going to be helped by some of the Labour policies, just to show you that I'm equally ambivalent to both sides of the political spectrum. Labour's main solution to all of this is rent caps, and that's going to make things even worse. But until we've got some sensible policies that promote the provision of affordable rented housing, and we have more relaxed planning rules that enable things to come through quickly, nothing's going to change.
And fair to say, just finally, Andrew, that, with these rate rises, plus that backdrop of, high inflation, cost of living crisis, higher energy bills around the corner, recession looming, that is all going to heighten demands for more affordable social rented housing, isn't it?
Well, absolutely. And that's the main barrier that we're seeing, particularly in some cities, both in the UK and Europe, where we've got pressure on being able to hire staff. If you think about restaurants, pubs, the lack of waiting staff that people have, the lack of taxi drivers or Uber drivers, and black cabs are fine, but there's a distinct lack of Uber drivers in many cities that are pushing up waiting times. All of these things are caused by a lack of access to talent. Some of that in Britain is due to Brexit. It's due to people leaving and not coming back. It's due to visa issues. We've had the medical professionals coming out this morning talking about that. And housing costs as well are a big element of that. If you're on low wages on 0 hours contracts, and you're being forced to live way out of town because the rents are so expensive, you're just going to go and live somewhere else and work somewhere else. And this then has a concertina effect on the wider economy. So until we deal with some of these issues, these long-term issues, we're going to have a continued domino effect of problems. And I'll leave you one slight bit of a slight positive nugget, I suppose, that one thing we have seen historically when rates go up is that house prices can potentially fall in some areas. So that might be one glimmer of hope, but it's not going to be much of a glimmer of hope if people are unable to get finance.
Andrew Teacher, really good to speak with you this morning. Thanks for joining us live here on LBC News Breakfast. Good to get your assessment. Independent property expert there and founder at Blackstock Consulting.